What's going on, everybody? Let's go. We got some folks ready to do some Q&A tonight. I hope everybody's having a fantastic week. Hope your trading week started good if you traded today, this morning, or London. I hope you had a great trading day. And man, we're gonna get into some good stuff tonight. I already got several people who have sent questions in. If you have a question that you want me to answer, man, feel free to go ahead and hit that chat and drop your questions in. But yeah, we're going to get into it a little bit tonight. I got class for TGP tonight at 9. So, we're going to cut this at, a little earlier than that so I can get everything ready for class for Trading Get Paid. But, we're going to have a little good time tonight. That's all. Irvin was good, man. North Carolina, Michigan was good. Trina, Antonio, Antonio was good, man. We're gonna have a good class, so get ready. I'm just giving everybody a couple seconds to get on. While they're doing that, man, if you're watching right now and you just got on early, that probably means you're already a subscriber. But if you haven't already subscribed to the channel, go ahead and hit that subscribe button real quick. Because that's going to help you go back and look at all the content I've been dropping. I've been giving you guys a lot of strategies, trying to give you what works for you. A lot of these guys, they just really focus on what works for them, but I'm trying to give you what works for you. You might not trade the same way I trade. You might not be able to, do everything the same way I do it, so I'm trying to give you what works for you. Good morning. Good morning. You must be on a different part of the world because it's evening over here. So, yeah. So, hey, while we're waiting, I just want to give, about another minute or so before we jump into it. Comment below what, out of all the videos that I've dropped recently, because I've been really trying to focus on strategy videos, because I'm trying, like I said, I'm trying to give you strategies that that will work for you, that maybe make sense to you. Which one of the videos that I've dropped recently has spoke, like the best to you? How, like, which one has helped you the most, or which one has really given you the most value? Go ahead and put that in the chat, because I want to make more content that you need. I mean, I can sit here and just make content based on what I think is good, but everybody's at a different level. I mean, I know what works. I definitely know what works, but the delivery of the content, the step-by-step type, routine, or do you just want me to go in and show you, like, clips from my classes, like what is it that is helping you the most? That's what I'd like to know. South Africa was good. So yeah, go ahead and comment and let me know, because I want to know. I want to know what's helping you. Did you guys like that fib video I put out this past week? Man, that Fibonacci stuff, man, with that pro tip, with that trend line, that's fire, bro. If you can master that, man, I promise you, man, you'll destroy these markets. So yeah. So man, look, while I'm waiting for that, I just want to jump into it. And man, we're gonna have a good time. Irvin said, stop taking bad losses. Yeah, that one for sure, because a lot of people get stopped out too quick. So I think that I knew that video was gonna help a lot of people, to be honest with you. I kind of knew, because even traders that are good, that like have been trading a while, we all struggle with that sometimes, like, because the market might move differently, and that stop loss, it's not just something we put there arbitrarily just to, say we use a stop loss. Like there's a strategy in using a stop loss. The way we use a stop loss should be done accurately and right. Brian Robinson, Shy in the building, Chi-Town, my Chicago people. I need to get out to Chicago again, man. I need to go to Portillo's. I need to get out to Chicago and hit that Portillo's, man. What's good? Yeah, so all right. We're about to jump into it. If you have questions, we're gonna do a Q&A. So if you have any questions, go ahead and put them in the chat. I've already got some questions that people sent in. Some were on IG, some were on YouTube. And so, I just want to I'm just gonna, jump into some of those first. But if you have a question, that you want to hear me talk about, or a topic you want to hear more about, yeah, definitely just drop it in the chat. Brian said, I'm next door. You live next door to Portillo's? Man, I hope you're not buff, bro. Like you gotta be living next to Portillo's, man. I hope you're eating, man, real good. Man, that Portillo's is so good, bro. So, all right, real quick, as we're getting ready to jump into this Q&A, let me get my questions out so I can see them real good. All right, cool. So, the first thing, let's talk about this, is if you say I'm at the gym now. Oh man. If you have a question, and the only thing I can do, and let me tell you, I'm probably like 10 seconds ahead of you. So sometimes if you hear like that little pause, that's because I'm looking at the chat down here, and I'm asking, like I say, drop a question. Well, that you're gonna hear that 10 seconds from now. So then, maybe 20 or 30 seconds from now, you guys might actually have it typed in or something. So there's a little bit of a delay. So, if it kind of sounds like I'm back, moving back a little bit, it's because I'm trying to work with your timing. Number two is, we're going to jump on these charts. We're going to show these charts, and let's look at that. And then number three is, man, if you are getting value from my channel, I need you to go ahead and hit that like real quick, because I need help getting these videos out there. We are almost at 60K. Right now, we're at over 59,000 and some change. We're within striking distance of that 60K. I'm trying to really get this channel over 60,000. I've been pushing into that realm for a while now, and I'd love to get it over 60,000, and trying to get it to more and more people. So when you like, and when you comment, when you hit the subscribe, share, all that kind of stuff, it really just helps us get the content out to more people. And if it's bringing you value and it's helping you, why not share it and give it to somebody else? So go ahead and hit that like real quick, and let's jump into it. So first question. Let me see here. First question is on YouTube. It comes from Biljo. B-I-L-J-O. Biljo. He said, or she, I don't know if that's a man or a girl or a boy, I don't really know. What is the best pattern to trade, and what time frame? So what is the best pattern to trade, and what time frame? Biljo, that's a good question. So let me just say this. Time frame, I've been really harping on this lately. You probably hear me in my videos say it, and I know for sure in class I've talked about it with TGP, which, by the way, if you guys aren't in class, man, you need to jump on board. And right now you can join TGP for $30 for your first month. So you need to go ahead and do that, because that's over on the 31st. That's a wrap on the 31st. So you could just go to tradinggetpaid.com, use the code TGP 60K, 60K, and you get 60% off your first month, which basically means you're joining for $30. So let's talk about that. But Biljo, one of the things, let me answer the second part of your question before I answer the first part of your question. The second, you said what is the best pattern to trade, and what time frame? I'm going to tell you this. Time frame is a little bit overrated. And I know that that's going to really shock a lot of people, but time frame is a little bit overrated. If you know what you're doing, time frame is overrated. And the reason I say that is because really solid traders, they understand fractals. All right. I understand that there's waves inside of waves. And so let me answer that time frame question. Let's jump on these charts real quick. All right, I got to move my stuff a little bit so I can see. All right. So here we go. You should be able to see my screen now. And let me just say this, man. These fractals are fire. All right. So first thing is this. Let me just answer that time frame question. So I want you to look at it like this. Right? And I see there's somebody talking about Elliott Wave. Yes, I love Elliott Wave, right? I love Elliott Wave. And this is going to help you understand some of that as well. All right. So technically, if we're talking about Elliott Wave and the time frame at the same time, let's make it accurate. All right. So the third wave has to be the biggest if we're talking about Elliott Wave. All right. So here's the thing. If let's just imagine that this right here that you're looking at is happening on, you know, you got a low, a high, a higher low, a higher high, a higher low, a higher high, right? So you have this, in fact, let me go ahead and change the color too so you can see it real good. All right, now you can see it a little bit better. All right, so low, high, higher low, higher high, higher low, higher high. All right. So here you have what we would call Elliott Wave. Okay. Now, here's the next thing. What we have to understand is that if you're looking, let's just say you're looking right here and you're looking at the 1 hour chart. Well, now, if you were to take that same thing, this 1 hour chart. So on the 1 hour, you see a low, a high, a higher low, a higher high, a higher low, a higher high. But now you go and you look at the 15-minute chart. Well, think of it this way. In every single one of these 1 hour candles, right? In every single one of those, that equals 4 15-minute candles. All right? 4 15-minute candles. So that means that every time you see one 1 hour candle print, you've already saw 4 15-minute candles print. So that means that this wave alone right here, just that first wave is going to have waves, right? It's going to be like a high, a low, a higher high, a higher low, a higher high. And that's right there. That red represents the 15-minute chart. That 15-minute chart represents the first wave on the hour. Now, guess what? You're also going to have this pullback. And that pullback right there on the red represents the 15-minute chart, but the one on the black represents a 1 hour. Then you get your next push. Volume comes in, right? And I know this is my beautiful Picasso work here. You got my beautiful artwork going on here. But I think you get the point. The point is that in just 5 waves or 3 waves and 2 corrections on a 1 hour, you got all kinds of movement on the 15. Now, let's say you take that and you go all the way. I'm not saying you should, but let's say you take that and you go all the way down to like the 5-minute chart. Well, guess what? That's also going to have waves inside of those 15-minute waves. Right? You get that point? So now you have, this is called fractals. This means that there are waves inside of waves. It means that the smaller time frame makes a pattern, right? It makes a, let's just say an Elliott wave. It makes a 5-wave series. Then that is only the first part of the next time frame. Then once that time frame completes, that's only the first part of the next time frame. And then by the time you get to it, this whole thing on the 1 hour, boom, 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 this all that. Well, guess what? that's only the first wave of the daily. That's only the first wave of the daily. You know what I'm saying? So what my point is that what time frame, that's your question. What time frame is best? That's the wrong question. It's not, and honestly, you guys ask me that question almost every day, and I don't mind answering it. I like the 30-minute time frame. I'm a big believer in the 30-minute time frame, but I'm not locking myself into a time frame. Let me tell you what I actually do, okay? What I actually do is I do top-down analysis. So I do, if I'm scalping, all right, so let's say scalping or day trading. Scalping or day trading. All right. I start my top-down analysis on the 4-hour chart. I want to get my high and my low on the 4-hour chart. I want to get my extreme zones on the 4-hour chart. After that, I go down to the 1-hour chart and I tighten my zones and I look for my fib. I look for my golden zone. I look for my fib levels. I look for my structure levels on the 1-hour chart, okay? After that, I go down to the 30-minute chart, and that's where I'm looking for breakout entries. Do I have volume pushing on the 30-minute? I'm not entering a trade if I don't have volume, right? There's no sense in that. So I need volume happening on the 30-minute chart. And if I'm not comfortable with the 30-minute breakout entry, if I'm waiting for a retest, maybe because there's a pattern, or maybe because there's pressure in the market, maybe because we're facing, you know, supply and demand or whatever it might be, maybe there's an institutional level, whatever that looks like, I come down to the 15-minute and I look for that retest entry. So I want a breakout and then a retest. Once it retests and I see that rejection, maybe a pin bar or an engulfing candle or whatever it might be, then I will enter the market on the 15. So to answer your question, I know it's a lot, but to answer your question, what time frame? All of them, right? They all matter. All of the time frames matter. I like to see patterns happen at the higher time frame and then entries happen at the lower time frame. So if I'm trading a head and shoulders, I'm really not looking to trade a head and shoulders on the 5-minute chart. That just don't even make sense to me, because it's not going to have enough power to manipulate the higher time frames. But if I see a head and shoulders on the 4-hour or the 1-hour, then I know once it breaks that neckline or it's approaching that neckline, I'm not taking the entry on the 4-hour when I see the head and shoulders on the 4-hour. Here's what I'm going to do. Let me show you on the screen what I'm going to do. So let's just say, come back to the black right here. Oh, sorry, I got to get rid of that text. So let's say we got a head and shoulders. I forgot to make it black. My bad. Sorry about that. Here we go. So we have a head and shoulders. We got the neckline. Everything's good, right? Or the shoulders, I mean. And then now price is approaching. Price is approaching that area, okay? So now what am I going to do? Here's how I'm going to approach this. Number one, I'm going to go ahead and I'm going to drop my line on my neckline. And that's going to be my entry area right there. All right. So let's just say that's the 4-hour though, or even the 1-hour. I'm not entering and I'm not waiting and I'm not looking for a breakout on the 4-hour, right? What I'm looking for is an approach, or I'm looking for a retest, a test of that zone on that higher time frame. Once we get to that place, watch this. This is going to help you. Once I get to that place right here, once I'm in my zone on the higher time frame, now you know good and well a 4-hour chart, a 4-hour candle is going to, it's going to take forever to move. 4 hours. It's going to, So what am I going to do? As I see my price approaching my zone, that is when I'm going to come down and I'm going to look for my 1-hour, my 30-minute, right? And I'm going to look for the entry on the smaller time frame. I'm not entering based on a 4-hour breakout. No, I'm going to come down to that 15-minute or that 1 hour or that 30-minute, I mean. And if I get a break here with a nice engulfing candle, let's just say, for an example, on the 15-minute chart, price pushes down, we get a nice little push up, and then here I get an engulfing candle. I'm happy. I'm entering the chart. I'm entering the market. I'm good to go. I'm going to take that trade. And the reason is because we have volume. I'm going to be able to go here. I'm going to be able to have a good risk to reward, and I'm going to be able to take that down to the structure level. And so everything's good. I'm happy right there. All right. So I would take that trade right there, just like that. However, let's say that we don't have a beautiful engulfing candle. Let's say price comes in here and starts to play around. We all know that that happens. We know that that happens. We know price moves dirty. We know price doesn't always move beautiful and perfect the way we want it to. We know that price moves dirty. So when I see this kind of stuff happening, I'm not taking a trade just because I see an engulfing candle. Why? Because that could be a fake out that's going to push me back up, and this pattern can reject. So what am I going to do? When I see that happen, I'm going to wait for the retest. So I see my playing around. I see a nice little engulfing on the 15. Now price is retesting back into my zone. I want to make sure that I have a clear rejection. So what am I going to look for? Maybe a nice pin bar. Maybe a nice pin bar candle, right? If I see that's my favorite candle to enter on. So as soon as I see that, you know, boom, I'm happy. I get a nice little pin bar. I'll take the trade. I want to see clear rejection, but that's happening on the 15 if I don't have clear volume on the 30. Does that make sense to everybody? So as far as to answer the second part of your question, the time frame, I need to see more information than just which time frame, right? What I need to see is I need to see volume and clear decision. I need the banks to go ahead and make their decision so that I can make my decision. I can't make my decision until the banks make their decision. If the banks are indecisive, what am I doing? Here I am with my small account thinking I'm going to manipulate the banks to move. No, come on, man. Until the banks make their decision, why is my money in the market? Right? Come on. I know that that's bringing value to you guys because I know where I was before I learned this kind of stuff, before I really started practicing this. I made those poor decisions so many times, which is why I know not to make those poor decisions, right? So if that helps you right there about the time frame, and Bill Joe, I don't know if you're on right now, but you know, I don't see your name, but man, listen, that's good content right there. You know, I'm an amen myself. You know what I'm saying? We taking it to church. Amen. You know, I just want you to master that because the time frame is really not that important. It's the fractals that are important. When you get to a place where you understand the fractals, the time frame just it's not as important anymore, you know, because now you understand that I could be looking at the 30-minute and know what the 4-hour looks like without even being there. I could be looking at the 15-minute and know what the 1 hour looks like without even being there. You know what I'm saying? Because I understand fractals. So I would encourage you to practice that. Until then, use the top-down analysis thing that I put in there. Make sure that you do your top-down analysis, your 4-hour, 1 hour, 30-minute, 15. If you're a swing trader, weekly, daily, 4-hour, 1 hour. Okay, that's what you should be doing. Now, what is my favorite pattern? I know I'm taking a lot of time on this question, but it's a good question. My favorite pattern. Well, there's two kinds of patterns. There's chart patterns and candlestick patterns. So I really don't know which one you're talking about. Okay, so you didn't clarify that. So if you're on, you can comment and tell me if you're talking about candlestick patterns or chart patterns. My favorite chart patterns are probably head and shoulders and flags. I like head and shoulders and flags because they're high percentage. Every chart pattern has its own Oh, and double tops, double bottoms, basically similar to head and shoulders. I like rejection patterns, right? I like patterns that are going to cause me to get in at a good price. All right. So I say that to say, if you're looking at different chart patterns, they all have different percentages, you know. Cup and handle patterns are very high percentage, but they don't happen as often, right? They're not as frequent in the market as, say, a flag pattern. Flag patterns happen every day, and their percentage is high. You know, when you see a flag pattern happen in the market, it's typically hitting at, it's typically going to continue over 70% of the time. So knowing that, and I see a flag pattern form, I know that there's about a 70% chance that it's going to go in my favor in a continuation, because a flag pattern is a continuation pattern, right? So when I look at that, I see, oh, let me grab this. When I look at that and I say, you know, price is moving up, you know, whatever. And then we get a pullback, and then we get a big, strong push up. I'm loving life right there. I'm loving life right there. Why? Because we have confirmed direction. We're in an uptrend. We have strong volume. I love that. And we're clearly in a pullback. So that means that at some point, price is going to continue up. Over 70% of the time, that's going to push back to the upside. I like that. I also like it because it happens every day. I like cup and handles too, but they don't happen all the time. So why, you know, I'm not going to waste my time looking for teacup patterns when they just don't happen every day, right? And I'm not going to force myself to look for something that's just not there, and then I manipulate. Oh, I think that might be a teacup. No, it's not a teacup, man. You're missing the mark here. I like flags because they're frequent and they're accurate. All right. Next, I like head and shoulders patterns, right? Let me make that a little better. I like head and shoulders patterns. Why do I like head and shoulders patterns? Well, I'll tell you why. Have you ever split a head and shoulders in half? Watch this. I know this is probably super beginner, but what is it? What is a head and shoulders? What is a head and shoulders? Guys, all we look at when we see a head and shoulders is we're looking at the reversal point. Have you ever noticed that a head and shoulders typically has long wicks up in this area right here? You see big long wicks happening in this area right here. Why? Because what's happened is you have uptrend, reversal point. Here's, you see those big rejection wicks that happen up here. And then what happens? Downtrend. That's it. That's it. It's just that simple. Head and shoulders patterns, I like them because they're simple, they're easy, and they're high percentage. Why? Because look, if that right there is your neckline, and you know we were in an uptrend, we reversed, we got rejection at the top, and now we're in a downtrend. Man, that's super easy. I can vibe with that. That's easy. I'm good with that because it's easy. Okay? Now, why do I like it? Also because it's high percentage. When I get to that neckline, here's the thing. If I know that uptrend, downtrend, reversal, right? Just like I showed you. If I know that that's the case, what is a head and shoulders pattern? Well, guess what? Here's the thing. If this is the downtrend part, high, low, lower high, if price breaks, that, I mean, right? It's just that simple. We don't have to make it complicated. That's it. We don't have to make it complicated. It's high, low, lower high, and we're going to get a lower low. So that means once it breaks that area, this is the area where you should not be getting in. Why? Because it's facing that area. Right? Let me clean that up a little bit. If we're here, if price is here, we got push down, push up, push down. We should not be entering yet. Why? because this could be a double bottom. We don't know yet. But if it breaks the previous low and we get volume, well, now that's it. High, low, lower, high, and we're going to get a lower low. So where's our next structure? And we trade it down to structure. It's just that simple. That's why I like a head and shoulders pattern, whether it be head and shoulders or inverse head and shoulders. I like both of them because they're easy and they're high percentage and they happen quite frequently. So I like them. All right. Does that make sense to everybody? Let me get some ones in this chat. I mean, I've been talking a lot. I need to engage the people. I need some ones in the chat if this is helping somebody. All right. If this is bringing value to somebody, I need to take a break for just about 10 seconds here. And I need some ones to make sure I'm helping somebody right now. That's what this is about. I want to help somebody. Now, the next thing is, because I know you guys are about 10 seconds behind me. The next pattern I like are your double tops. And I like them for the same reason that I like head and shoulders, because they're easy, okay? And they're high percentage. Why? Because what is a double top? Low, high, right? We see that. Here we go, pushing back up. We're at that level. If it breaks, we get a higher high. But guess what? It didn't break. It rejected this area. So now what happens? It pushes down and we get the same thing that happened at the head and shoulders. So either this is going to start ranging or this was a reversal. So you got an uptrend. Let me change colors. Let me change colors. You got an uptrend. You got a rejection point. Now we know we have low, high, higher, low. Wait a minute. We're testing this area. We're testing it. And guess what? We didn't break through. No, we did not break through. What happened? We started pushing down. We started getting wicks. We started getting rejection. So now we're right back to here again. Because if this gets rejected, then it's going to come back here again. And if that, and now what do we have? We have a ranging market. But what if it does break through here? Well, guess what? Now we're no longer in an uptrend. Now we are looking for a down move. So what happens? Boom, we get that beautiful move. It's all about market structure. So that's why I like flags, head and shoulders, and double top, double bottoms. I hope that answers your question. I know I took a lot of time on that, but I really think that that was going to help a lot of people. So that was a great question. Thank you, Biljo, for that question. Let's see. Let me look through the chat here. Let's see. Do you prefer Elliott Wave? I just talked about wave theory, so yes, I do. Trina said you just totally answered my question. Awesome. Glad to hear that. Let me see. Dumiso, I don't know if I'm saying that right. Dumiso. How to overcome loss. Listen, man, that's a mindset question. And maybe I'd love to hear more, like specifically what you're asking, but overcoming a loss is done in risk management. Overcoming a loss, like, to be honest with you, I think that's the wrong terminology. I know that a lot of YouTubers say that, how to overcome a loss. The truth is how to not let your loss overcome you. That's the right way to look at it. It's not really about overcoming a loss. It's not letting your loss overcome you, right? If you're not overcoming a loss, it's because you're allowing a loss to either harm your mindset so you trade poorly in the next one, or you were risking too much and you blew your account, or whatever that might be. The truth is, how do we overcome losing? It's we don't let losing overcome us. if we can take a loss and just take it in stride, we've overcome the loss. That's it. We're done. We win, right? To me, I tell our students all the time, a loss with a purpose where you can identify why you lost is actually a win. You didn't lose, you won, right? A loss that you don't know why you lost, that's a problem, because now you got to go back test. You need to figure it out. A loss that makes you chase the market, that's a real problem, because now you have a bigger issue than the charts. Now you have a mindset issue, and nobody can control that except you. I would tell you how to overcome a loss. What I would tell you is overcoming a loss doesn't happen after a loss. Overcoming a loss happens before the loss. You already overcame a loss before a loss happened if your mind was in the right spot, because you did your preparation, you marked your confirmations, you did your top-down analysis, you did what you thought was going to be the right thing, and the market just didn't, sometimes it just happens. A head and shoulders pattern rejects. Sometimes it happens. It is what it is. You thought you were trading off of support, it broke through and went the other way. It happens, right? All of us. I take losses. We all take losses. But the problem becomes when now we lost and we were over risking, so now we feel like we got to go get it back. Revenge trading. Maybe last trade that we lost, we were at a $5 lot size, but now we're like, man, I got to get that back, so I'm at a $10 lot size now. Wrong. What we should be doing is we should have 1% risk in every trade. Okay, 1% in every trade. So that means take your total account size. Let's say you have $1,000 and you divide it by 100. I'm just giving you the super simple way to do it, right? So that would give you equals $10. So you know that your total risk should not be more than $10. So now you look at your trade. You have a trade going. You're looking for a break here. You get an entry. Your stop loss is here. Your take profit is here, whatever. If your stop loss is 10 pips, right? Then your total risk is $10. Then that means you should be divided by 10 equals $1 per pip. That should be your lot size, right? That's the equation. If you don't do it this way, you're going to find yourself chasing the market. I hear people telling people all the time that your lot size should just be, if you have 1,000, use $1. If you have 5,000, use $5. If you have 10,000, use $10. That's crazy. That's crazy. You are going to blow your account, okay? Or you're going to be crawling through growth, because if you're scalping, you probably could be using a bigger lot size at 1%. If you trade at 1% and you lose, you lost 1%. So if you had $1,000, you lost $10, right? Yeah, whatever that looks like, you lost a few dollars. Now, okay, add the broker fee and the spread, whatever else. Maybe you lost, $11. At the end of the day, you would have to basically lose about 89 straight trades, or 85 to 89 straight trades, depending on your broker, to blow your account. If you lose 85 trades in a row, trading's not for you, man. I'm just telling you, I'm being honest with you. If you lose 85 in a row, you're doing something seriously wrong. You should not be blowing your account. Blowing your account is you have to work harder to blow your account than to not blow your account. But the problem is you guys are risking 10%, or you don't even know what your percentage is. You're just using a flat lot size. I do $5 no matter what. But yeah, your stop loss is 40 pips. You're going to blow your account in 3 trades. you need to use a 1% risk, maximum 3%. I used to use 5%, and even that was crazy aggressive when I first started. I would encourage you to be 1 to 3%, 3% max, no higher than 3%. 1% is the happy spot. All right. So how do you overcome losses? That's how you do it. You don't let your losses overcome you, because you did the work before you got in the trade. Your trading mindset is won or lost before the trade is won or lost. You win or lose in mindset before you win or lose in technical analysis. You got to get that mindset right. All right. So Dumiso, I'm sorry if I butcher your name. Please forgive me. But I hope that answers your question. How to draw the fib in top-down analysis. Do you do it by the trend? Let me see. How to draw the fib in top-down analysis. Do you do it by the trend? I guess let me make sure I understand your question. Let me pull up the actual charts. So when I'm doing top-down analysis, so let's just look right here together. So I showed you on the markups. Let's look at the actual candles. All right. So if I'm looking at the 4-hour chart, this is GBP USD. If I'm looking at the 4-hour chart, all right, the first thing I'm going to do, only thing I'm going to do, is I'm going to grab my high and I'm going to grab my low. Now, you can obviously see I'm much closer to my low than I am to my high. Everybody with me on that? Now, so you know you are, look at this. You have a range here. Look how many pips that is. That's 600 pips. You ain't getting that tonight. I mean, you can, but I mean, not really. You're not going to get 600 pips tonight. So what am I going to do? I'm going to go there and I'm going to ask myself, is there a better structure level since I'm so close to the low? Do I even need to be thinking about that high way up there? Probably not. You know, I'm not looking to get 600 pips tonight. So what can I do? Maybe I can bring that to a low, you know, a closer high, right? Maybe I can bring that to a closer high. Another trick to do that, go on your charts, go to your settings, and right here where it says status line, you can go in here, open market status, all that kind of stuff. You can put that right in there. Previous day close, high and low, and that little gray dotted line will be on your chart. All right. You see that little gray line right there? That's your previous day high and low. All right. So now you have your high from the 1 hour and you have your low. Now the question is the fib. This is where I drop my fib. I take my fib right here. I go from the top to the bottom. Now, I'm going to test to see if anybody watched my video. Is that the right way to drop the fib? Somebody help me. I'm going to give, because I know you're behind 10 seconds. I need to know, has somebody help me in the chat right now? If you watch my videos and if you're if you're a TGP student or if you've been around my channel for a while, tell me right now, is that the right way to drop the fib? Okay, give you 10 seconds. I'm going to take a drink of water while I wait. All right. The answer is no. Okay. This measures price. Oh, who hit it? Who hit it? Hawk Landon. Hawk Landon. You hit it on the head. Right there. We are measuring price by going up and down. But we are measuring time when we use the tools that are at our disposal. 1, 2, use that diagonal line. 1, 2, go on through just like a trend line. Okay? So you have a downtrend. Here's your low. Here's your zones and all that stuff. I take that and I'm going to drop my golden zone right here, right? I'm gonna get that right. Put that right here, golden zone. Boom. Now I can get the fib off the chart. That's it. That's it. Whose question was that? Let me see. Derek Smart. How to draw the fib in top-down analysis. Do you do it by the trend? Yes. Just like that. Now you have your golden zone. But here's what's awesome about that. Go back. What happens now if price pushes up? Man, isn't that easy now? Isn't that easy now? You know what I'm saying? So now it's like, boom, I got a beautiful entry. Boom, I have a nice take profit. Boom. Like, this is beautiful. This is beautiful. And guess what? Guess what? Watch this. That's 52 pips. You just caught 50 pips just by using the fib right. Just by using the fib the right way. That's it. Now, do I enter on the 1 hour? No, not at all. I come back now. Now I come back down here. I come back down here and I'm waiting. You know what I'm saying? So now let me go back. Watch this. Right? See that? I'm waiting right here. I want to see entry. Boom, boom. I want to see that come off of this. Now, notice this. Once you get to this structure, here's your next high right here. That's your next high. Price, look at what it's doing. You know what's going to happen? Right here, look what time it is. By the time we get to London, right, it's pushing, it's pushing, it's pushing. By the time we get to London, here we are. Now here's the London move. Boom. You shouldn't be trading during Asia anyway. So that's how you would do that. Right? Then if you really need to, you can come down to the 15-minute and wait for the retest, because you know you want to make sure that you have solid movement, right? So I hope that makes sense. I hope that answers your question. You know, Derek Smart. So now, let's see. My man said, let's go. Man, he ain't been here in over a year, man. I ain't seen that cat in forever, so I ain't even gonna talk about him. Love trading, get paid. I watched you for over 3 years. Yeah, absolutely, man. I appreciate you, man. Thank you, Crypto. Appreciate your support on the channel. How can I overcome fear, FOMO, and the fear of losing? Bornface, Jeffrey, I'm gonna tell you the same thing. Go back and watch what I just said to how to overcome a loss. Your preparation is gonna prepare you and set you up to not have FOMO and fear. If you know you did the right preparation and you know that you're confident in your skill set, you're not gonna have that fear. And to be honest with you, if you're not confident in your skill set and you do have that FOMO and fear of missing out and all that, to be honest, you probably need to take a step back and be in demo anyway. You really shouldn't be trading live money while you got your emotions all tied into it. That's just the honest answer, you know. But go back and watch what I said to the last question about what do you call, about overcoming loss, because that's the same answer I'm gonna give you for this. Nope, time, yep. Derek Smart hit it, Hawk hit it. No time, yep, or perfect. I need to increase my confidence when taking trades. Yeah, you definitely gotta. I would say personally, I know this is gonna sound like a sales pitch, but the best way to build your confidence is to be with people who are confident. Honestly, jump in TGP, get in the community, take advantage of this, of the deal I'm doing right now, 60% off, and jump in the community with us where we are confident. Let that confidence rub off on you, and where our trades, my trades right now in the community are hitting over 90%, 90% for the year. You know, like we might lose one trade in a week, You know what I'm saying? If that, like we're killing it. So coming into TGP, tradinggetpaid.com, trade with people who are confident, trade with people who are winning, and come win with us. That's all I'm gonna say about that. What is the best way to draw a trend line? Do you consider wicks? Ahmed Awal, great question. And here's what I'm gonna do. I'm gonna show you something real quick that I find very, very powerful. Okay. When I draw a trend line, so let's go back up here. When I draw a trend line, I draw from top 1, 2, go on. Whoop, sorry. 1, 2, go on through. Now does that look like an accurate trend line to you? Of course not. That does not look like an accurate trend line. So the obvious answer is that this wick right here, that wick right there, look what time it was. 5 a.m. That was a London wick. And at 8:30 between here and here, there's 9 a.m. So the likelihood is we had 8:30 news. That's what happened right there. We had 8:30 news. All right. So is that accurate? Probably not. So does that mean I disregard it? No, not at all. Because if news could push it up in that range before, why wouldn't it do it again? So here's what I would say to that. Don't use a trend line. Use a parallel channel. Now you come through here. 1, 2, go on through, but watch this. Now you see how that opens up? See how that opens up? Come down to that body. Now watch this. When you draw that, I'm not going to do the whole thing, but look where that golden zone is. Look where that golden zone is right there. That tells you that this downtrend has not yet come into that golden zone. That parallel channel can give you some really solid stuff. Now, the next thing I'll tell you is this. You can use 2 trend lines that will give you some really solid information. One, the same thing I did earlier. 1, 2, go on through. The next thing is, if you know that you have wicks manipulating price, just come here. 1, go to where the real consistency is at, right? Go to your real consistency. Look at that. Now you have 1, 2. Look what happens down here. Look what happens down here. You get a first fake out. The next breakout is what? If we know that the first fake out or the first breakout is the fake out, then what do we have? Downtrend, fake out, boom. Now it's going to come to here, right? This was just your fake out. That was your fake out. If you look at that on a weekly or a daily, that's just a big fake out. So what do? That trend line was important. This trend line was important. And what is it? It's giving us the fake out, and then we take the breakout. Boom, boom, boom. It's going to give you those levels. So how do you draw a trend line? 1, 2, go on through. That's the rule for the trend line. But do you consider wicks? Yes, you consider wicks. But use common sense. If you know that there's a wick that's pushing the trend line into an area that doesn't even make sense, then we shouldn't be using that. We should try to get a better normal structure. 1, 2, go on through, right? The other thing about a trend line, which I know we don't like to talk about it, we have to make adjustments. Like, we're so hard-headed sometimes. We're humans. I get it. 1, 2, go on through. Now we see this fake out. What's so wrong with me saying, you know what, guys? I'm going to be safe. I'm going to move my trend line based on what the market is showing me. What's so wrong with that? I'm getting a little bit of a later entry, but I'm getting a safe entry. It's a safe entry. You know, there's nothing wrong with adjusting, but don't adjust if there's no reason to adjust. 1, 2, go on through, consider the wicks, and make sure that, you know, it's giving you proper information, that it's not giving you information that doesn't make sense. Okay. Let's see. We got Oh man, it's 8:30. We're about to wrap this. When drawing support and resistance areas, this is Carlos 76. Ahmed, that was a good question, bro. Carlos 76. Hi, Joe. When drawing support and resistant areas, do you draw them from the end of the wick or the body? I'll be telling you the same thing I just said about that. You know, consider the wicks for sure. One thing I like is bodies and wicks. Why? Because it gives you like real information, right? So watch this. You come here, see those bodies, how price closes on those bodies. Notice how we have a wick that's there too. You know that's a good area because you have bodies and wicks. You had a close here, push back up, and then you had a wick that rejected it here. I like that, bodies and wicks. Now, I don't just use a line. I use a zone. If I get a body and a wick, there's my zone, right? So now I come back up higher, you know. If I got a body's right here. Now, do I have wicks? You know, do I have wicks? Boom, right? Boom, boom. Oh man, that was reminding me about class. Wicks, wicks, right? Wicks in here, wicks, wicks, wicks. So now I have a zone. Now you have a zone, that a breakout zone at the top and a breakout zone at the bottom by using bodies and wicks. Okay, so definitely bodies and wicks. London is king. Yes, it is. But I love US session too. Amazing instruction. Man, I appreciate that, Derek. How many pairs is recommended to trade? I used to be like one pair only. I would say to a beginner, stick to 1 to 2 pairs, you know, maybe 3 at max. But try to find a family of pairs. I think it's not so much the amount of pairs, it's the family of pairs, right? If you're trading, let's say, GBP USD, let's say NZD CHF and Aussie, you know, some random pair, right? Aussie, whatever. That don't even make sense. None of those pairs correlate. That don't make sense. What I would tell you to do, trade GBP USD and then trade AUD JPY and GBP JPY. Why? Because all 3 of those pairs correlate. What I'm saying is, if let's say you like GBP JPY, but the pound has news tonight, that's cool. Jump off of GBP JPY and hop over to AUD JPY. That looks the exact same. Look at this. Watch. So GBP JPY, right? AUD JPY. That move is literally moving. It's moving in the same direction. You don't have as much strength, but it's moving in the same direction. You know what I'm saying? So what I'm telling you is use pairs that correlate, because if you're really saying is you like to trade yen. But if GBP has big news tonight, don't trade it, right? If you like, look, you got this. Boom. If you got British pound yen or Aussie yen, trade the one that don't have news. It's a family of pairs. If you like GBP USD, maybe you might want to try AUD USD, AU. Try doing that, you know, but don't try to trade pairs that don't make sense with each other. You know what I'm saying? Like, I got folks out here trading NZD CHF. Why? What are you doing with that? You know, is that helping you? What are you doing with that pair? You know? But maybe if you don't like that, try GBP NZD. Now you're gonna be getting a lot of speed. You know, if you're a scalper, that's a great pair. So I guess my point is just have a couple of pairs, but try to make sure that they're pairs that make sense together. So it gives you real options and you're not having to switch your whole way of thinking every time you look at a different pair. You know, that's what I would say about that. Thanks. So you really opened my eyes. It's time to join your winning team for sure. Yeah, jump on in. Go to tradinggetpaid.com. You know, and just let's get it, man. Let's get it. I would love to help you out. Is there any TGP members in here right now? I know they're getting ready for class right now because we're about to go and have class. We actually have class in 30 minutes. So if you join now, if you jump on board right now, you'll literally be able to be in class here in 30 minutes. So I would tell you, look, hop on, go to tradinggetpaid.com right now. Watch this. Let me drop this in here for you. Go to tradinggetpaid.com, join the team right now, and then literally you'll have everything set up and ready to go by the time we start class at 9 o'clock. You'll be able to be in class with us. So yeah, I would love to see you in there with us. Go ahead and jump in. The next thing is use the code TGP60K. That is only going to last until August 31st. It's over August 31st. All right. September, we go back to normal. But if right now, if you use the code TGP60K, TGP60K at checkout, you're going to get 60% off your first month. So that means you're joining TGP for 30 bucks. Bro, 30 bucks is stupid. I don't even know why I did that. That's crazy. That's so stupid. I'm giving y'all game like insane in there, and trade setups, and the community, and the 75, almost 80 classes that you get to watch that are not on YouTube, and downloadable resources, and live class. I mean, bro, come on. That's crazy. That's crazy. You're getting all of that value, and you're getting it 60% off your first month. So jump in. Let's go. Let's go. Let's go. I promise you this. If you come in and you jump on board and you do what I say, because that's the problem. Don't come in there and then you're gonna say, well, I'm gonna try to do whatever I want to do. Well, that's cool. But I promise you this, if you do what the education tells you to do and you stick to the plan, man, I'm gonna turn you into a beast. You know, I'm gonna turn you into a beast. Just look. That's not nice. Siri said that's not nice. I'm gonna turn you into a beast. But look, check this out. Right? You can see the community. Look at this. All the new traders, got class, got people in here. Look at this. ATR2. This guy trading on the 5-minute chart. Boom! Look at my man in here. But guess what? Tony pays attention. Tony pays attention and comes to class. That's why he's out here killing it. You know, he's paying attention in class. You know, you got people, we're out here doing quizzes with people, all kinds of stuff. Man, it's fire, man. It's fire. We got the quiz and then the after. Got people winning together. It's really, really good. All right. Now, the next thing is if you go here, you get the community, what you just saw. You get the trading courses. Look at this. I'm talking about starting at the very beginning. I'm going to teach you about candlesticks, take you all the way through. But I want you to see something. There are 79 lessons. There are 79 lessons, and I add more all the time. It's not just the basics either. It's not just the basics. What about when we get in here? What about when we get in here and we start talking about abnormal movement corrections, currency cycling, critical mass momentum trading, how to trade, how red folders impact, convergence trading with simple. Man, I'm getting into some crazy stuff in there. It's not just basics, you know, trade setups. Look at this. I don't hide nothing, guys. You can go back and look. I don't hide nothing. Win, win, win. You can see the befores and afters. Loss right here. Win. Loss right there. Win. Got a couple losses. That was back in February. All these wins. All these wins. Look at this. I don't hide nothing. I put all of it out there for you to see. Befores and afters. Not hiding nothing from you. You can see every trade I take. Then people say we don't show what we're doing. Come look at what we're doing. All right. Live classes. Downloadable content, you know, it's fire, guys. It's fire. So I hope that's giving you some insight, man. I hope that gave you some insight. We got into some good questions tonight. Some really cool stuff. Mondays at 9 every week is when I do class. That's a good question. Irvin Martin. So yeah, that's it. Daniel Coronado, good to see you, my bro. Etc. said this is some useful information. I really like that name too. Etc. That's creative. Classes are Monday at 9. Mike said $30 is a lick. Y'all better join the winning team. Let's go. Let's get it. Let's see. Any tips for those of us who are always super nervous about executing a trade, taking the risk? The psychology challenge is my biggest challenge. Yeah, I talk about that a lot, and I did talk about it a little bit earlier. I don't know if you were on. I did talk about some of that in the preparation stage a little bit earlier in this live, but I talk about that stuff a lot in class. So definitely, I would just encourage you at this point, come into the TGP membership and jump in live class with me. Watch all the videos I have on mindset, a lot of cool stuff on mindset, and I could definitely help you. So yeah, so anyway, that's cool. That's cool. Yeah, so that's it, guys. Shout out to all of you jumping on, taking some time to be with me on live. I hope this brought you a lot of value. Don't forget, real quick, hit that like button, comment on the video, not just a live comment, but go once the video posts, comment on there and tell me what you thought about it. And subscribe. Hit that subscribe button. If you're not a subscriber already, you see the content where, you know, this was just like a random live, like me just giving you answers to questions, but go back and watch my videos and see the kind of value that I bring to the table. I know I'm giving you major value. My motto here at this channel is education over entertainment. I am not here to entertain you. I'm not here to make you laugh and have all a good time and all. I am here to make you into a beast Forex trader. And I know I can do it. I've done it so many times. There are so many of them out there who are full-time traders now who make their entire income from doing this because they were my students and they did what I told them. They did what they were supposed to do. And now they're out here killing it. So definitely appreciate you guys. Share this stuff and take advantage. August 31st is the last day. Take advantage of that Trade and Get Paid deal right now. Go to tradeandgetpaid.com. Use the code TGP60K, 60K, and get 60% off your first month. Everybody else, TGP members and new TGP members coming. I'll see you in class in about 20 minutes. Peace.